Welcome to the show. This is Finance 101, where we cover the basics on finance. And for those that don't know, I'm in the financial industry. I've been in it for over a decade, and I specialize mainly in insurance. Aisha Redmond's on the show. She specializes in debt and credit. She's here to talk about what makes your credit score. Aisha.
Thank you so much for having me, Charles. I'm so excited to be here and to share this information that I hope is going to change someone's life. As you know, our credit is so important. Basically, it's being used for everything that we do in life, from getting a job, from getting insurance, to purchasing your home, your car, you name it. And credit is usually looked at in order to get what it is that you're after. And so
that's your report card, right?
Basically, yes, for sure. It's going to follow you throughout life, okay? Yeah. Unlike, the ones that we got in elementary, high school, or what have you. Those kind of went by the wayside. This one, you will have with you and it will follow you all of your days.
Yeah.
So,
what makes up your credit score?
Absolutely. So the first and the largest chunk of what makes up your credit score is going to have to do with payment history, right? Are you making your payments on time? And if you're not, how often have you been late? Okay, so it's really important to make sure that you're paying your debts on time, you're making those loan payments on time, and you
paying
are
those bills too.
Absolutely. Yeah. Whatever it is that you have that you owe, you want to make sure you're paying those things on time, or it will not pay off for you in the long run. Okay, and next, so the next largest chunk, which is 30%, is capacity, and what that really means is how much of what you've been loan are you using? So you have a credit card, $1,000 credit limit. You want to be sure that you're not using more than 30%. So at any given time, you should not have more than $300 on a card that has a $1,000 credit limit, okay? 30% is great. 10% is the sweet spot. So you keep it under 10, you're good to go. Next is your accumulation of debt. 10% may not seem like much, but it still plays into the calculation. This is how many inquiries do you have? How many times is someone looking at your credit profile, checking your history?
Even those soft credit pulls too, right?
Even those soft credit pulls, one, maybe not two, but five, you're in a danger zone, right? And so you want to pay attention to how often you're having your credit looked at. Next is the mix of credit. So you have a mix of installment loans, revolving loans, and how are you using those as well. So it's awesome to have something that you're paying on time every month that looks like car payments, loans, and things of that nature. That's the same amount every month over a certain period of time. And then also revolving credit. So when we talk about credit cards, you definitely want to have something like that on your profile, but then making sure that those other components are in place, keeping the percentage correct. Not too many inquiries for different cards. Last but not least, 15% has to do with the length of credit. How long have you had these accounts and how long have they been in good standing? So these are the percentages that make up your credit score. This is how the calculations happen. The more that you pay attention to these different sections and make sure that you're intentionally paying on time, you're intentionally keeping your limit under 30%, you're intentionally not having too many inquiries. Also, you have a mix of credit as well as having good credit history over a long period of time. Thank you so much for tuning in and listening to all of the ways that your credit is made up. Thank you so much for having me, Charles.
And thank you, Aisha. And that is Finance 101.